Welcome to this explainer. Today, we're diving into Walk 4, the ledger of life, and we're stepping away from those boring spreadsheets for a minute. If you've ever felt like financial statements were just, dry, sterile mathematics, well, think again. We're going to see how these numbers actually hold the memory and the literal heartbeat of a business.
We're kicking our journey off today on a quiet terrace with our narrative guides, Mira and RF. Picture this. Mira brings along a small wooden box packed with old receipts and a faded calculator, while RF's got a pharmacy balance sheet and a packet of salted almonds. As they sit there and the afternoon breeze settles, they realize something super profound. Those old receipts and dusty ledgers, they aren't just dead records. No, they're living reflections of choices, patterns, and care. Accounting is quite literally the memory of an organization.
Section 1. The Foundations of Accounting. More than just rules.
So to really read the memory of a business, we've got to establish these foundational principles first. Take the accrual principle. We all know it's about recording transactions when they're incurred, not when the cash actually clears the bank. But Mira brings up this brilliant example from her grandfather's textile unit. He'd record a sale the very second an order was confirmed, just fully believing the payment would show up eventually. It taught her that, if you look beneath the standard accounting convention, the accrual principle is really all about trust. You're putting your faith in the commitments people make to you.
Then we have the going concern principle. We routinely assume a business is just going to keep operating indefinitely. But think about the human element behind that for a second. It acts as this powerful emotional vote of confidence in an organization's future. It's an assumption of continuity, a fundamental ingrained belief that the entity is going to survive to see tomorrow. Pretty deep for accounting, right?
And then there's the matching principle, which is really what ensures fundamental fairness. Arav points to his uncle's pharmacy to explain this one. In the pharmacy, you absolutely have to pair the revenue from selling a specific medicine directly with the cost it took to acquire it. You don't just wildly celebrate the income without explicitly acknowledging the effort, the cost, and the sacrifice it took to actually make that income happen. Now, binding all of these principles together is our common language. I'm talking about accounting standards, like IFRS or Indian accounting standards. These rules ensure that a financial statement makes total sense whether you're sitting in Mumbai, London, or New York. And what's really important here is that this language isn't static. It's constantly evolving to respond to new financial instruments, new realities, and shifting risks in the global market.
Section 2. Snapshots, stories, and breadth.
Knowing the principles is one thing, but seeing how they actually build a complete picture of an organization's health, that's where the real magic happens. When we look at the financial statements, the contrast is just fascinating. The balance sheet is a static snapshot. It freezes time to show exactly what you have, your assets, liabilities, and equity at one single moment. But the income statement, that tells a moving story, a performance over time. It tracks the flow of revenues, expenses, and ultimately net profit. So together, they show exactly where you stand and the journey of how you got there. But here is the catch. An income statement alone just isn't enough. You absolutely need the cash flow statement. Mira recalls a local bakery that was incredibly profitable on paper. I mean, their income statement looked fantastic, but they still struggled to pay their suppliers. Why? Because liquidity is the literal breath of a business. As Mira beautifully puts it, without cash, even the strongest organizational lungs are going to collapse. Profit is theory, but cash is reality. To accurately diagnose that financial health, we turn to ratio analysis. Think of these ratios like the blood tests of a business. A single blood test doesn't tell the entire story of your life, obviously, but it immediately flags what needs attention. They measure your short-term solvency, your liquidity, and your operational efficiency. They basically tell the doctor exactly where to look closer.
Which brings us to Section 3, Diagnosing Health Through Analysis.
So, how do we actually apply these tests in the real world? Well, let's look at 3 fascinating business mysteries our guides solve right there on the terrace. Mystery number 1, a rapidly expanding dairy cooperative in Coimbatore. On the surface, the numbers were totally smiling. They had rising revenues and growing net profit. But when Arav ran a current ratio analysis, he uncovered a severely strained rhythm. Their short-term liabilities were getting dangerously close to exceeding their current assets. So despite the profits on paper, they actually couldn't pay their vendors on time, and milk deliveries were getting delayed. They had the profit, but zero liquidity. Fortunately, that diagnosis led to a cure.
By adjusting their operational rhythms, specifically by revising their credit policies, renegotiating payment terms with suppliers, and implementing a much tighter inventory cycle, the dairy cooperative successfully regained its breath. In just 3 months, their current ratio improved. And this matters so much because it proves that once you see the underlying problem in the numbers, you can fix the reality on the ground.
Next up, we have a mid-sized textile exporter in Tirupur. They wanted to understand the impact of a massive equipment upgrade they just did. A funds flow analysis revealed a pretty dangerous dynamic. Fixed assets obviously increased, but their working capital had shrunk dangerously. Receivables were rising, which meant cash was coming in slower, and their overall liquidity was tightening up incredibly fast.
This is a perfect example of moving way too fast without looking at the whole picture. As Mira notes, they had invested in speed, but they hadn't checked the brakes. By running this analysis, the management realized the danger just in time. They responded by tightening up their credit terms and tracking their inventory way more closely. This stabilized their working capital and finally allowed that massive new investment to safely yield returns.
Finally, let's look at a regional bookstore chain. They survived the pandemic by aggressively shifting to online sales. Using a DuPont analysis to break down their return on equity, the new reality became crystal clear. Step 1, their net profit margin improved due to lower overhead from online sales. But Step 2, their asset turnover drastically declined because all those physical stores were just sitting empty. And third, financial leverage increased because they had to take out emergency pandemic loans just to survive.
That analysis didn't just show that they survived, it showed exactly how their survival was built. The surface looked perfectly calm, but the undercurrents were highly uneven, so management took action. They strategically converted those unused retail stores into fulfillment centers to bump up that asset turnover, and they aggressively paid down the high-interest debt to reduce their leverage. They literally used the story hidden in the numbers to fundamentally balance their structural health.
Section 4. The stories numbers tell. As the afternoon begins to fade on the terrace, the calculator settles down, and the almonds are mostly gone. These 3 stories, the dairy, the exporter, and the bookstore, reveal the deep, almost poetic philosophy hidden behind standard financial statements. We often think of accounting as this sterile exercise in compliance. But ultimately, looking at a ledger is looking at the living memory and the very presence of an organization. It's a record of human effort, mistakes, and triumphs. Analysis isn't about passing judgment, it's about gaining a deep, empathetic understanding of the business's journey.
So, I'm going to leave you with a few things to really ponder about your own ledgers. What do your numbers say about your choices? How do you track movement and meaning? What stories do your statements tell? Thanks for joining me for this explainer. Keep asking questions and always look beneath the surface. Catch you next time.